Hi, everyone. Wow, it's great. I mean, so many people here toward the end of the day. Of course, we saved the best for last. There's our grand finale. Cross-border investment. I know you've all been waiting to hear all about cross-border investment, which really means Silicon Valley and China today. Those are the two anchor hubs where all the action is today, and more mingling with China coming into the U.S. and U.S. going into China, VC and innovation trends merging and purging, as we have seen over the years. So we're going to be talking today about some of the issues involved and some of the news involved, like bike sharing, for instance. Everybody knows about that, right? Mobike and Ovo and all of these bike-sharing unicorn companies. And we'll be talking about a lot of other things, too. Hot tech sectors, enterprise, consumer internet, because we have all these specialists here, all these experts here on stage with me. And I think they were just introduced, but each one of them has their own perspective on what's happening in Silicon Valley and China today. And we'll get to hear their viewpoints. And so maybe we'll have a few audience questions toward the end too. So if you want to warm those up in the meantime, that would be great. So anyhow, why don't we just go down the line, and each one of you just tell a little bit about your views and what you're up to these days, and what your perspective is on this topic, just as a brief introduction.
Okay, my name is Jim Mao, partner at the WestSummit. Very happy to be here. So WestSummit actually really started in Silicon Valley about 8-9 years ago. We focus on, we do a lot of cross-border, actually we focus on 85% of our investments is in Silicon Valley, 15% in China. And we are a growth stage investment firm. And we're very, as we talked about, we're very hands-on. We spend a lot of effort helping the entrepreneurs in the U.S. with their, when they're expanding into China with strategic partnership, with optimizing the supply chain, additional growth capital from Asia, and also IP protection strategy, and etc. So, we are fortunate to be a lead investor in a number of sector leaders in enterprise, in AI, digital media, so robotics.
Yeah, all the hot sectors, right?
Yes.
Okay, good.
Hey everyone, my name is Shuo. I'm the general partner at IOVC as well as Agile VC. And I know a lot of you guys out there are also members at Shinect, which there was a very active discussion going on in the group earlier. So outside of the venture role, I'm also the CEO of a nonprofit called Shinect, which stands for Share, Inspire, and Connect. And we're a community of engineers and entrepreneurs. And we very much focus on opportunities cross borders, but also helping our engineers based here in the Valley to really break into the startup ecosystem. And I guess a little bit more about my background. Before the venture side, I spent a long time at Goldman Sachs working on helping them build their cross-border business and presence in China. So our deals include Alibaba's IPO, Wanda's IPO, but also on the earlier front, working with Didi, working with Meituan Dianping on a lot of strategic investments. And prior to that, I was running my own startup here in the Valley. And then on the fund side, we're early stage enterprise investors. We really focus on the B2B space. Although outside of B2B, we've made a couple of exceptions. We also spent some time in data analytics as well as fintech. I've personally followed blockchain for a long time, so happy to talk more about that as well.
Okay, 2 enterprise investors in a row. And next, the consumer side.
Hey everyone, Jason Costa. I joined GGV about a year ago now. Prior to coming on board as an EIR there, I spent about a decade as an operator, mainly working as an engineer and a product manager at Google, Twitter, and Pinterest. Most of my time at GGV is actually split between doing consumer investments, and then also I spend a lot of time working on what we like to call frontier tech investments, so things that are maybe 3 to 5 years out from mainstream consumerization. And that includes everything from autonomous vehicles to industrial automation and AI applied to certain verticals and so on. So I split a lot of my time both between investments here in the States, and then the firm, of course, invests quite a great deal in China.
Okay, so let's talk a little bit about what the hottest tech sectors are right now, and those that can cross borders, China, Silicon Valley, both ways. What do you see as the hottest tech sector right now and going forward over the next few years? Is it really the AI and VR, or is there something else out there that we haven't heard about yet today?
Sure. We spend a lot of effort looking at the VR AR space in the last 2 years, and we haven't made any investment yet.
Why not?
Because we've been looking for a sustainable, business model that would really help, a sustainable business. But I think it's maybe a little too early. I think there's still a lot of innovation going on. We made investment in pretty heavily in the enterprise space, including the cloud computing, enterprise software, and SaaS. Including also the database and digital media space.
So do you think VR is too risky today? It's too early stage to jump in as an investor?
I think VR is going to have tremendous growth, innovation going to take place in the next a few years. We have seen VR application, VR AR application in probably going to have what we call investable cases going to come out in the next probably a year or two, and we actively are still engaging with the entrepreneurs in this space right now, and also institutions, academics.
Okay, all right, and Shuo?
So we actually focus on investing in Silicon Valley, and we were chatting about this in the speaker room as well. Reason for that is because I think we're probably the earliest investor among all of us on stage here. So we really focus on early stage investments, and for that reason, focusing on investing in a specific geographic region, particularly here in the Valley, really makes a lot of sense for us. But in terms of the cross-border space, we're really excited about applications in enterprise. And the reason for that, while a lot of people go, oh, enterprise, that's not the most sexy business. But the reason why we're really excited is because if you just look at your phone, consumers have access to some of the most advanced technology, some of the best applications. But where a lot of us spend most of our time is really at work. You can argue that people spend 50 to 80% of their time at work. And that's really where productivity is super important. But if you look at some of the software and tools and applications that we use at work, most of them are not amazing tools, right? They're not things that we're really excited to use every day like we do when it comes to apps like Snapchat or Facebook. So I think there's a lot of opportunities there, and that's very much true in China as well. In fact, overall speaking, I think in the US, enterprise is a very mature industry, whereas in China, it's very nascent. You really just see kind of the beginnings of companies that look like Salesforce emerging in China. And in a lot of subsectors, there's a lot of exciting opportunities. And unlike consumer, where most of the consumers in different geographic regions, their needs don't overlap, in the enterprise space, 80% of enterprises' needs are actually the same wherever they are. They all need HR software. They all need accounting software. They all need CRM of some sort. And so given that that's the case, there's actually a lot of opportunities for cross-border in this case. So for example, one of the portfolio companies we're working very closely with, we're helping them look into expanding into Europe as well as into Asia. They're already successfully in Japan and in Korea, and now we're helping them negotiate with folks like Alibaba and Huawei to get into China. And so it will take a really unique model where you find the right business partners to work with that actually makes sense to localize and really integrate with the local Chinese market.
Jason?
I would just add that I think electric vehicles are going to be really, really huge in China. The government in China has pledged $16 billion in order to hit a number of targets by 2020. There's environmental pressures around pollution. The amount of petrol oil that is imported into China each year is going up by approximately 15%. And then there's a massive consumer upgrade where people are buying their own vehicles. I think 28 million vehicles were sold in China last year. So I think there will be a real push around getting more clean energy placed there, especially around the vehicular front. I know that the government's offering subsidies, free license plates. So there's a number of interesting things that are happening there, and I think you'll see more companies like NextEV, which is based in China, and they're building their own electric cars, come out over the next few years. I think the other space that's very, very interesting, at least in China, but probably many other places as well, is the cost of human labor as far as manufacturing goes is going up in China. I think for every dollar that a Chinese worker earns, a worker in Thailand will earn about 40 cents, and then a worker in Indonesia will earn about 8 cents on that same amount of work. So as the wage increase is outpacing productivity, coupled with a strengthening RMB, I think you're going to see major investments in innovation happen in industrial robotics. So everything from robotics going into the manufacturing floors, into logistics for warehouses and so on, in order to keep China competitive against the likes of India, Vietnam, Thailand, et cetera.
So you mentioned robotics and electric vehicles, and do you think that these are areas where China is going to be leading in the future, and are there other areas where China is going to be leading in the future and catching up or closing the gap with Silicon Valley and other leading tech hubs?
I certainly think so. I think at least on the electric vehicle front, I think that's kind of a reset. Japan, Germany, and US pretty much have petrol engines locked up in terms of where the technology is. But I think electric vehicles, everybody is sort of starting from a new start line. And then certainly on robotics, I mean, it's incredible to watch some of the innovations that are coming out of China today and other places as well. So, I think robotics today are roughly a $35 billion market, and I think about 30% of that actually comes out of China. So it's very impressive what they're doing.
And turning to business models too, aside from the whole tech innovation, a ramp up that China has seen over the last 10 years, business models too are very advanced in China. And some of these ideas are floating over to the US now too, like the virtual gifting and things like that. Is China really leading in some of these areas? Anyone on the panel?
Yeah, I think China is leading definitely in the consumer internet, consumer electronics, based on the massive and advanced supply chain manufacturing capability. We see, example of Lime bikes as a business model innovation in the shared economy, and China actually used to be we call C2C, copy to China. Now is actually China exporting some of the innovation in the consumer applications, back to the U.S. So the other example is we helping actually, some of the Chinese companies in the consumer space actually merge with the U.S. technology companies that creating on a global basis a much more effective business model. In a case that we actually lead investor in a company called Ninebot, and we helped combine Ninebot with the Segway, which if you guys know the electrical kind of scooter company, and that basically enabled the U.S. business to have, for instance, 70% cost reduction. However, enabled the China company, be able to also gain the sales channel, the patent, IP in the U.S. So that's the other example of cross-border activity.
Yeah, sure. On the business model question.
And I guess also to add on a little bit, I think taking a step back, you can understand cross-border dynamics in that China obviously has the market and it also has the capital to fund a lot of this. Whereas in Silicon Valley, I would say the edge is really on the technology as well as on talent. So with something like enterprise, where you see a lot of mature enterprise companies here, you see a lot of the talent going to China for the market and for the capital that funds our businesses and building innovative business models. But reverse way around, you see a lot of business model innovation in China, like we were chatting before about virtual gifting and just being willing to pay on mobile online. You see a lot of that business model being copied here in Silicon Valley and being adopted here. And then applying kind of a technology layer on top of that and enabling that.
Sure. So if you bring the two markets together, you've got everything, right? You've got technology, you have team, you have market, you have capital. Is there anything else missing?
Yeah, well, so before the panel, I was sharing with all the folks on stage as well. I think at the very, very core of things, as a successful company, there's really only three things at the end of the day that you do, right? You raise money, you make money, and you hire people to make money. So given those three areas...
And you cross your fingers, right?
Crossing your fingers that those are the three things that you get to focus on. And with those three things, if you have all the high quality capital, or at least abundance of capital in China that can then flow into Silicon Valley to back some of the companies here that might not otherwise have the ability to raise money, that's a key thing. Another thing is being able to have access to the right market, right? So that's why you have a lot of Silicon Valley companies always constantly thinking about expanding into new markets, and particularly in China, where consumers are willing to pay. And you see enterprises beginning to understand the whole SaaS model and wanting to pay for most high quality software, whether it is to help them save money or to make more money. And I think the last point about talent is really important, which is also why even within the US, you see a lot of companies relocating from the East Coast into the Valley to be able to hire some of the best engineers, to be able to find the right people who have the operational experience. So I would say those are some of the key things.
Okay, and then you mentioned also the capital flows, and I'm just thinking about, we talked earlier about some of the venture capital returns out of China and where the best returns on investments are, whether it's in China today or whether it's in the US. I know a number of you are really more focused on the US than China. Like you're only 15% of your deals are in China, and most of your deals all of your deals are in the US so far. And GGV is really back and forth, 50-50. So where are the best? Where are you seeing the best venture returns today, and for the future as well? And how has it performed historically, China and the U.S.? I think you have some perspective on that, right?
Yes. So we actually see, China as I said, the consumer internet really enjoyed a tremendous growth from 2000 to 2015. And if you look at the leading top 5 venture capital firms in the US, they actually enjoyed annual IRR about 70%. So that's tremendous. It's second to none in the world. And after 2015, there's a tremendous amount of capital put into invest into the consumer internet space, the auto space. So we actually participate a little bit, as I said, we really focus on Silicon Valley, kind of a really deep tech, core technology investments. We believe this is a long-term, this is a cornerstone of companies, to be successful. That's a very critical part of that. So going forward, as I talked about, we believe the SaaS, the enterprise software, is still in the early stage of a growth. We see, according to some of the statistics by CP Insight, by 2020, the SaaS will generate about $2 trillion of income. That's 10% of U.S. kind of GDP. So China is still in the early stage of. We are very excited, and also we bullish about the enterprise space in China.
And Jason, from GGV's perspective, since you're doing 50-50, half and half, U.S. or China going forward, and where have you seen the best returns? And where do you see the best returns going forward?
In the U.S., to be totally honest, and I'll approach it less from the returns perspective and just more from the product and engineering innovation perspective, where I think there will be interesting opportunities to generate returns later. Most of the interesting stuff I'm seeing is actually around the enterprise in the States.
In the States?
In the States, yeah. I'm not seeing a ton of interesting things coming out in the consumer space. I'll talk a little bit about why. I just think in consumer, ads are effectively the economic backbone of mobile and of the consumer internet. And today I've heard statistics as high as 95% of the online ad market in the U.S. go to Google and Facebook. So they're continuing to just suck the oxygen out of the room. And I think that's reflected with the performance you see of entities like Twitter and Snapchat and the LinkedIn. Like these, it's very, very hard to sustain and grow business in the ad space when you have these two behemoths that are like really just owning the space. So most of the interesting companies like Confluent and Buoyant and Mesosphere, Fast Data, they're actually all focused on the enterprise space. In China, like that's where to me it becomes very, very interesting because at least the business model, they've done some wonderful things around transactions, e-commerce, virtual gifts, where they've actually figured out a lot of these apps. Like the ad market is largely it's extremely nascent in China, and the apps, through their scrappiness, have figured out how to get people to open their wallets and users. And so on that side, I've tended to find that in China, there's a lot more interesting opportunities actually in the consumer space. And so there are wonderful apps like Inca doing live streaming, like Keep doing fitness, LingoChamp doing education with applications of AI. So I'm seeing more interesting opportunities and just general product innovation in China.
So what's the next big home run out of China? I mean, we had certainly the first generation of Alibaba, Baidu, Tencent, and those companies are still at the top. And then now we've seen Didi come forward, JDI, and Xiaomi to a certain extent, and a few others. What's the next big home run out of China?
Well, I just wanted to add something really quick onto our previous topic, which is I think one of the bigger differences between investing in China and Silicon Valley is that if you had, let's say, $1 million to invest, $1 million would probably not allow you to invest in much. In fact, you won't get into most funds. You won't be able to get access to any of the deals in China. But with the exact same amount of capital, and you invest that in Silicon Valley, and you could have access to a whole different level of deals. And hence, you see a lot of capital coming into Silicon Valley trying to invest in some of the best technologies. And I guess on your next question as well, that actually makes an impact in this space. I think in China, a lot of the larger companies that we see now are really on a platform front. They're really platform companies at the end of the day. And so you see a lot of companies in specific sectors and products or services emerging out of that now. And that really shaping kind of the trend of the next wave of companies. Actually, through Shuonan, the nonprofit, we just hosted Richard Peng earlier this week. He used to be the head of M&A and strategic investments at Tencent for the past near decade. And he was talking a lot about what they were thinking about when he was there in terms of different areas. Obviously, you have the BAT and perhaps JD belongs up there, some of the best large companies. And then below that, you have obviously the emerging companies coming out of there. And then even on the startup front, you kind of see Xiaohongshu, some of these smaller startups really emerging in the commerce space. But I think for something to build, as you said, to be the next home run, it's got to have innately some level of platform to it that enables it to grow and bring more folks in.
So are the bike sharing apps, are those going to be home run companies? I mean, they certainly have raised a lot of money, which raises some other questions too about whether it's too much money, too fast. Both of them are unicorn companies now. Both of them are still collecting money, more money. So how's that gonna all turn out? Is that gonna turn out to be a disaster for these companies? Are they gonna start seeing the same sort of consolidation trend that we saw in the taxi hailing, car hailing business? So, too much capital can be a bad thing, right?
Absolutely. And on that question, I don't think any of us invested into the bike sharing space yet. But what I will say is what's really fascinating about the bike sharing company that's completely different from Didi and Kuaidi from before is a new layer of business innovation. Because in the bike sharing space, you require users to give you a deposit before they're allowed to use the bikes. So it's allowed companies to be cash flow positive from day one. Whereas whatever users you adopt, you already have that level of deposit that can already cover the cost of the bike. And so whatever usage is on top of that. And so you have much more cash flow healthy companies emerging. So of course, it's still challenging when they raise a lot of money and it's a lot of pressure. But I think it also shows that they have a lot of ambitious plans in place. I think if you were to ask the average entrepreneur, if you're asking for $1 million, what if I were to give you $10 million instead? What would you do with that 10 million? I think most people would struggle to answer that. But I think some of the best entrepreneurs, if you were to ask that question, they would be able to think 10x, 100x, and they would tell you what they would do with all that capital, right? And I think the second thing on top of that is I think bike sharing is the first time we actually see mass adoption of a network of Internet of Things, right? It's an IoT connected device at the end of the day. You have smart locks attached to these bikes that collect data on your geographic location, your usage, and that's a different layer of adoption. We've been talking about IoT for years, but the first widespread adoption is really in the bike sharing scenario. And I think the last point about this is just in terms of going in tides with government and regulation. In China, you see a lot of push towards environmental protection in terms of trying to solve pollution. And in fact, some of the largest bike sharing companies might be the largest scale effort towards solving that problem unexpectedly. So I think this is a really interesting space to watch out for.
Anyone else on the unicorn question?
Yeah, just to add on what Shuo was talking about in the IoT space, we also believe there will be a tremendous amount of growth in China in the IoT space, just because of, number one, the number of connected devices is growing exponentially in the last couple of years, and we'll see that trend going to continue in the next 5 or 20 years. Secondly, computing power it's also, because of Moore's law, it's actually become cheaper, faster. And so we actively looking for opportunities in China in the IoT space, whether or not it's a platform play or it's a vertical kind of enterprise to B or to C. So we're very excited about the IoT space in China.
Okay.
I'll just add on the consumer side, because there haven't been any, I would say, like style curation mechanisms or just taste-making outlets. Like there's not been a concept of lifestyle TV. There's not been a concept of lifestyle magazines in China for decades now. And then you have this great consumer upgrade coming up where the middle class is growing and they have discretionary income. I think there will be a major player who will emerge there. I don't know if that will be JD or Xiaohongshu or a new player altogether, but I think there will be a very, very interesting play there on the sort of taste-making side. And then I also think there's a real opportunity on the AI side, and the reason why is because there have been 3 vectors that have been coming together. One is there's just a tremendous amount of talent. I think of all of the AI research that's done, I think 20% of the researchers are based in China that have been published, and so there's a tremendous talent pool. 10 years ago, there was no Oli Cloud, there was no AWS or Microsoft Azure there, but that computing power is there now. And then I think in 2017, China's going to generate like 15% of all internet data. By 2020, it's going to be 21%. So the data is there to run through the training frameworks and build really great models. So I think with those three things coming together, the data as an input, the talent pool, and then the computing infrastructure, there's a real opportunity for a huge AI player to emerge as well.
So we were talking about the capital and the market, the huge capital inflows and the huge market in China and the fast growth in China. So today, as you're looking at startups to invest in and emerging companies to invest in and mature companies to invest in that are high growth still, do you take into consideration whether they have a China strategy or not? And if they don't, is that a turnoff?
For us, it's not a requirement. So because we are a growth stage investor, so when company gets to the growth stage, most of the entrepreneurs are thinking about expanding overseas, and China is definitely a very important market for these companies. And however, for the most of the portfolio companies we have invested, the entrepreneurs, the management team, CEO, they have the aspiration to expand overseas. And in these cases, we basically, step in to work with them and work out a strategy and also pace the expansion into Asia, starting by, who are the partners we should team up, and what's the market opportunity, what's the market go-to-market strategy, and how to protect the IP, and etc.
And for us as early stage investors, it's really not a requirement. I think nowadays the biggest difference from perhaps even just a couple of years ago is that most startups think global from day one. So they might not have a perfect strategy of how they're going to do that, but you can tell that they're actively thinking about this. And I think that's also how you distinguish some of the best entrepreneurs. Most of the really great founders will tell you that, we don't know exactly who to talk to, but we've thought about this, we've looked into this, and we generally know that we need to find a really good local partner. These are the people we have in mind. We know some basics of where some of the large tech giants are going. But from an early stage investor perspective, it's really not a must. I think as an early stage founder, you really just have to be focused on winning your local market. And so as long as they demonstrate that, I think that's what we're looking for. And when they get to growth stage, we can obviously be helpful in terms of helping them to think about China, helping them think about other markets.
Okay, Jason?
Yeah, I think it depends entirely on the stage. I mean, when GGV invested in Airbnb in the Series B, they were very much thinking about China, and that was important because their model is one that has global network effects. But if we were to look at a seed stage deal that was very, very early, that was a consumer application or an enterprise application, those guys are normally just thinking about local recruiting, about acquiring local customers, and about raising capital. So for them, I think it would be a distraction that early on.
Okay, so I'm just curious of your view about the impact of the growth of China venture capital on the kinds of deals that you look at and the investment returns and just the whole race for, the tech race. Has the impact of China venture capital, are you feeling it? Because, it really originated here in Silicon Valley. Now it's kind of gone global. There's so many sectors, so many markets that are investing, and China is the second leading one in the world. And it has its own homegrown venture capital market today. So are you feeling the impact of the homegrown VCs on the kind of deals that you're looking at?
Yeah, we definitely, felt quite a bit, of that competition in Silicon Valley, particularly last 2 years. They're very enthusiastic about coming to Silicon Valley and participate in the growth of high-tech companies and growth stage companies. And we see that it's coming, coming down a little bit this year. And we see that as a first wave of Chinese capital coming to, going abroad, including coming here. However, they probably, some of them learned their lessons by investing, heavily into some of the we talked about VR, AR, early stage companies. So I think that's, as I said, as the first wave. And however, as a growth stage investor, our unique value proposition really stand out. And when we, talk to entrepreneurs, they understand, we basically a lead investor with a clear strategy. We sit down working together with the entrepreneurs. So we feel that this, competition. However, we still be able to, take some of the deals, win some of the deals we really like.
So for entrepreneurs sitting out there and they may want to go to China, should they go to a Chinese, China venture capital firm, a cross-border venture firm, or a U.S. venture firm that has some dealings with China? What's the best strategy for entrepreneurs out there if they really want to get into China? Should they go direct, indirect, detour?
That's a good question. I think it depends on which sector they're in, because I think it's very different depending on which industry you're in. Obviously, if you're in traditional hardware, you probably should be in Shenzhen, right, for all the manufacturing related contacts. But it really depends on the specific sector. Having been a founder in the Valley myself, I know it can be really confusing to try to figure out who the right person to talk to is. And I think this is actually a really good place to be for figuring it out, because in a very condensed amount of time, and by here I mean this conference, obviously, in a very condensed amount of time, you get to see different styles of different folks, whether it's investors or entrepreneurs. You can kind of try to figure out what the right channel would be. And I think mostly for early stage entrepreneurs, it's really important to talk to someone who can be really real with you, because I think it's great to make friends, but at the end of the day, it's about talking to someone who is not afraid to give you criticism, to give you real feedback about what you're doing right and what you're doing wrong. I think that being real is very different than being harsh. But someone who's able to communicate with you honestly about the lay of the land in China. And I know a lot of folks who have defensible technology are really worried about going to China because of IP-related issues. Having a JD myself and having spent some time on the legal side, I think at the end of the day, some of the best companies that go into China, companies like Airbnb and Uber, don't necessarily have defensible technology, right? You could argue that they have their own algorithms and they have their proprietary operations and executional playbook. But I think in China, where it is one of the most fiercely competitive markets in the world, it's more about your strength of execution. So, yeah.
Is it too late for an entrepreneur to go into China and have any kind of impact today? That's my last question. Is it too late? Are all the good positions taken already?
I think there's a lot of opportunities left. Well, Jim.
Yeah, I think it is always not too late. Really depends on the nature of the business, and if you have if you have a defensible strategy that that protect your the core IP. If you have a secret sauce. Can that be protected? And it really depends on the nature of the business. I think that China, as the economy is still growing, and I was shocking to hear a couple of days ago. Actually, China consumer buying power today is actually more than twice of that as the United States. So I think that
still plenty of room.
Exactly. Yeah.
Okay, great. Well, thank you all for listening, and let's give a round of applause to our panelists. You were terrific. Thank you.